welcome to the Millionaire Logistics Forex channel. And right here, guys, we'll be sharing with you a very good forex trading strategy that will help you to take profits off the market on a consistent basis. And right here, we'll be using the chart just to backtest some of the trades I took, some which I didn't, but then we'll show you exactly how it went, and then everything will actually make sense to you. So for this particular content, guys, we're using our same strategy, using our Fibonacci tool, using our trading session, just a particular model that tells us exactly how to find profitable daily setups from the chart. So guys, if you love the idea, don't forget to subscribe to the channel, don't forget to like, and don't forget to share your thoughts in the comment section as we trade forex with Millionaire Logistics. So guys, the pound USD 15 minutes chart time frame. Remember guys, I applied this strategy only on the pound USD chart, and so far it's been very much profitable, and it helps me to focus particularly on one pair and extract profit from it daily. You will agree with me that that's the idea of trading forex on a profitable basis. So we'll be backtesting the chart from the 7th, right? From the 7th of what? From the 7th of this month, pretty well. So quickly, let's look at this. Is a Monday. This is Monday, right? 7th of November on a Monday. So we just used to, the first thing we want to do, guys, is to know what the flow of the market, that's the market flow. And guys, remember, this is more like SMC ICT concept, but it's very much simple, very much simple. You need not worry about break of structure, change in character, shift in market sentiment. Not really none of that, most of that jargon, right? So we just want to use first the previous flow of the market. So right here, previous flow of the market, we see that where the market is coming from, where the downside to the upside. So we assume that what the market flow is bullish, right? And then we come on Monday and we find that time of the day, which is exactly here. You see 10 a.m. Now, looking at this range from this point to this point, we're very much trading between the 38 fib level and the 0 fib level, which is exactly what we're looking for. Now guys, what we want to do here is that this Fibonacci tool which you have here, if you refer to our previous concept, we're looking at these levels, the Fibonacci retracement level, which could either be liquidity grab points or what sensitive levels, resistance and support levels where the price will react to. Remember guys that the idea of forex trading, or the idea of the chart, is to trade in direction of what the trend. So we want to see these levels right here as either resistance or support levels that the price may likely most react to, and then extract maybe 20 pips or 30 pips off the market. That's exactly the idea. Now when we're using what trading session of the day, we also want to trade this market when it's most active and volatile. So for the pound USD, we're taking cognizance of what the London session, we're also taking cognizance of what the New York session. And guys, I've been so right here guys, the simple thing here is this. I see that this market as at what the 10 a.m. 10 a.m. is very much reacting on where the 38 fib level, and right here you can see some bullish momentum here. And at this point, personally, I got on my trade from this point, and my target was just this 0.0 here, and I took off 30 pips off this market. I didn't really get up to this level, honestly. I just took 30 pips off this market and I left the market, you know. So that's exactly what I did. So guys, I will just be doing a very much rough sketch on just what I took off the market and see how these things relate with the different market parameters that presented itself and how I took advantage of it. It's not really going to be much, just very short content. But guys, the most important things I take note of is the market flow of the previous day. That's one. Then I look at those points on the chart, set them as reference points. If I don't see this bearing, maybe the market break this level here, you know, this level here, and the market breaks above this level before the beginning of the London session, I just ignore this parameter right here, and then I use the internal market structure, which we're going to be seeing as the chart goes on when I see that opportunity on the market, right? Definitely a whole lot of things present themselves, but we're going to look at what the most important ones. So right here, this was the first trade I took. The New York session, guys, I used the market day sentiment, the current day, and I do what from the lowest point, as you can see, it's going bullish, to where the highest point before the New York session, which we're going to be looking at the chart here. The New York session starts by 15, right? 1500, which is somewhere around here, right? So this is the highest point before that session. Right here, you can see that market reaction here, although I didn't take this trade, but looking at the 15 here and this reaction, definitely there is some profit to make. This would have been the target, but right from here, like I said, 20 to 30 pips, and right here, this is the opportunity, 28 pips here, 30 pips off before you get off the market, which is also a fair one. And then the next thing I did here for the next day, I used this previous daily high and daily low, just the high and low, indicating that the market is still bullish, right? And I come here to find what my 10 a.m. London session, which is here, and I target what the closest resistance level or support level. So right here, the closest level that the market will definitely come to grab liquidity is where the 38. So this is where I got into the market and I was able to see 29 or 30 pips, which is around the 38. And then it's okay to then observe the move. Further now, looking at this is the 15. I also got into the market again. This is exactly what I did. Now that day is holding some bearish momentum right here. So I just did the same thing. The lowest point before the New York session. And right here you have it. This is the lowest point. This right here is the lowest point. And I just wait for a bullish kind of confirmation, which we saw around this 0.0 level, just around here. And I targeted where after this bullish momentum, this was where I risked it from here to where the 38 level. Definitely this is an area to watch. So I'm trading right here the corrective move. That's just the case. And then the next thing I do, a fast one, getting to the next day, you can see the same thing, that this market structure, the market flow is still bullish. No SMC, none of that. And right here, you can see that the first day, the next day right here, the market closed where below the 38 fib level, which could very much indicate that this market is very much ranging. And at the beginning of the London session, it wasn't much. Market has already been closing. Candles have been closing. The 15 minutes time frame, candles have been closing below the 38 level, which definitely could mean that, yeah, this market could actually be changing sentiment for this day. But then there was an opportunity here, though I didn't take this. I didn't really take this because it wasn't that clear, so I waited for the New York session, which this is exactly what I did. The highest point of that day to where, since the market is proven bullish, bearish rather, to this point. And then at the New York session, this was my target. This was the market reacting at the 38 level as a resistance level. And then you can see this move right here, which I did, 36 pips off the market. I took 30 and got off the market. So that was all for that day. And the next day, bearish. Next day, I'm expecting a bearish move from the high to the low. So I'm expecting to trade a retracement move. And then when we came into the market at the London session, you can very much see that the market is bullish right here. And then at this point, this was a fairly good trade to take. Targeted here, though the market delayed for some time. Stop loss just above this level, and I targeted here to where the 38.8 fib level, and this was exactly what I got, 30 pips off the market. And that was exactly how I traded. This is exactly the simple concept I trade. But if you look at the market, you very much see that I've developed a tool that helps me to build sentiments, directional sentiments, SMC, ICT patterns, demand and supply zones on these time frames. That helps me a lot. So I also use that as a confirmation tool as well. So right here, when we look at this market here, this is exactly the move I took inside before this 38.0 fib level. I can very much see that before the London session started, you can see that this market, there was a shift in sentiment, and the market where this price pulled out. So definitely that kind of invalidates this 38.8 fib level right here, exactly what I was mentioning earlier on. So I used the structure of that day, using where the high, the lowest point, and the highest point before the London session, and then I targeted where this move here, just to the 38 point zero fib level, and I got just a little one, about 28 to I think 28 pips here. But then I made it up from where the New York session, because that just wasn't the move I was kind of expecting. I was expecting at least 2 or 3 candle movements, you know. So I still went for that later on to trade the New York session, and I did the same thing from the lowest point to the highest point before the New York session, which exactly right here. And then I waited for some little confirmation after all this, you know, weak rejections at this 0.0 fib level. After this confirmation right here, the shooting star candle, I entered the market here and I simply targeted where my 30 pips towards the 38.0 fib level. So right here, you have this range in mind from lowest point to highest point, since the market flow right here is still bullish, right? And then I will be expecting, though there may be a market gap, but at the beginning of the London session on Monday, this is exactly where I'll determine my bias. If I find the market at this point within this 0.0 and the 38 fib level, at this point I'll be targeting where the 38 to expect maybe a grab of liquidity somewhere around here, or within, you know, 50, 38 level or 50 level, you know, for the market to determine where it's going next. But if I find the market somewhere around the 38.0 fib level on the London session of Monday, being where Monday will be the 14th, right? 14th of next month, I want to push the market to further to the upside and targeting just this range somewhere around here. So that's my bias. That's exactly how I look at the market, and that's how I trade it, guys. So if you like the idea, if you like the concept, don't forget to share your thoughts in the comment section. And also, you can also benefit from the tool, this tool here that we've developed for quite some time. For a long time here, we've been developing this tool to make charting and analyzing the chart quite easier for us. And all we just do is to use the manual confirmation time of the day to find entries daily and then execute. All right, guys, so until we meet again, Millionaire Logistics Forex.